And so after a red day yesterday, Bitcoin is managing to get a bit of a bounce from the lows of around 20,000. It's now sitting at 22,500. We've got some altcoins showing green, but is this just a dead cat bounce? Is this a little bit of a reprieve before a bigger fall to the downside? That's what we're going to take a look at. We're going to dissect the markets to see what is happening. What am I doing in the market? And could we be seeing worse prices just hours from now? Don't forget to smash the like button. Don't forget to subscribe. As always, guys, if you want to check out the links to PRIMEXBT, check them out, guys. They're giving up to $7,000 of bonuses if you're an experienced trader looking to trade this incredibly tough market. I'm personally not trading right now, but feel free, if you haven't set yourself up on PRIMEXBT, click the link, at least take the bonus and then wait for a good time to trade, but not right now, because right now we need to understand what is going on in this crazy market. We've got Bitcoin slightly green here. As you can see, it kind of ran all the way down to about 20,800, just really close to our really critical line at 20,000. I'm going to explain exactly why 20,000 is so critical. We've managed to get a little bit of a reprieve bounce to about 23, but then we fell back down to about 22.5. So now the question is, can it get back above 24? That's going to be the key here. Or is this just a calling off? Is this a big move now? The bears are exhausted a little bit. Are the bulls going to have a little bit of reprieve before a bigger move like something like this to the downside? That's what we need to watch out for. Now, in order to understand what's going on, let's head on over to the wider markets. And we know yesterday was a horrible day for the equity market. We had the Dow Jones closing down 2.8%, S&P down 3.88%, NASDAQ down almost 5% on the day. Guys, this is horrific. I mean, you were seeing companies like Amazon, Apple, Meta, Block moving like altcoins. Some of those were losing double digits, 7-8% on some of these huge blue chip companies. Really tough market out there right now. We're going to dissect all these things that are going on. On top of that, so we already know crypto is correlated to the equity markets, but on top of that, crypto is not helping itself with, you know, the whole Celsius situation and staked ETH situation. That is continuing to fear the market as well and cause a lot of problems. So we're not helping ourselves at all. If you've not watched my video from 20 hours ago when I was in Texas, go watch that video explaining my thoughts around my disappointment at the greed in the market, from project owners to individuals like you and I who are helping these companies grow in size and allowing them to do what they do. We've got to take a stand for them. We need to just get this out of our industry, because otherwise we are no different to TradFi. We are no different to traditional finance, which we hope to disrupt and be the better version of. At the moment, we're not that. We're exactly the same. We're making the same mistakes, and I explained that in that video. But now, after 20 hours of transit, I've just landed back in London after Consensus, and this is the key. Consensus 2022 in Austin was a great event. And so even now, when we're in crazy price points now, I want to give you the message of hope as well, because I'm going to share a lot more gloom in this video, but I want to give you the message of hope first. And that is, you do not want to panic sell in this market. We need to get to work right now in this bear market. And when you go to events like Consensus 2022, it reminds you of why you're doing this. You're not doing this for price speculation. You're doing this to build great dApps, to build use cases, to build the future of this technology. And when you see those great minds at it working, the developers, the engineers, the people working on it, the teams, the sales teams, the architects, they're doing such a great job. They're so passionate, and you can tell we're just in the early innings of something really amazing. So that was a real positive takeaway, and just reminds you that, look, these fluctuations in price happen. We've seen it happen time and time again over the life of cryptocurrencies, and no doubt it will continue to happen. But those in the market right now who are managing to accumulate, they're going to stand themselves in good stead. Now, what I wanted to share with you was this. And let's head on over to the weekly chart, probably give you the best view. Now, you're seeing a few different things. So the first thing is, on the weekly chart, you're seeing a little bit of support come in around the 200-week moving average. Can you see that support there? That support's coming in around 22,000. That's an important level for us to bounce from. Okay. Now, you're also noticing that what's now happening is we are testing the December 17 bull market high at the 25,000 level. Really critical level. And in fact, what we should do is, let's see if we can come all the way into this weekly candle. And what we'll notice, if we bring that into focus here, the weekly candle here, on this weekly candle, had a high of 19,666, and this weekly candle had 19,220. So let's take the high. Okay, the high being 19,666. That is the level that we cannot lose here. Okay, if we break below that level, we're now lower than the previous bull market run, which is not great at all. And we have to reevaluate some of our price targets. So that level really does need to hold here on crypto. I mean, this would be unprecedented for us to go test a previous bull run high and start breaking to the downside. It's a really important level for us to hold. And we were scarily close. We were $800 close to this just hours and hours ago. So it's something for us to watch. Now, let's cover off what's going on with a little bit of Celsius. And what I want to notice, first of all, is we know there's the whole issue, if you've not caught up with what's going on, go watch my previous 2 videos. But with Celsius, we know that they've got 400 million odd, or it's actually 500 million, as you can see here, locked in MakerDAO, in wrapped BTC. Now, the issue with this is if it gets to the liquidation price, this will then get thrown into the market and it will create more of an issue with the Bitcoin price and more self-fulfilling prophecy of the market starting to fall. So what you're noticing Celsius do is they're continuing to add to their position. They're continuing to add to allow this liquidation price to go down. So they've done a good job of bringing this to 16,800 now, which gives them some breathing room. Before, this was sitting at 21,000. So we were really, really close. And now you can see that they've got some breathing room here now. We also know there's a whole bunch locked in Lido with the staked ETH and ETH peg. That is causing a fear. We just need to resolve through this issue. But you know my views on this, guys. I'm not going to beat on about it too much. Ultimately, I don't want Celsius to get liquidated. I don't want them to go bankrupt because it's users' money. I don't like the project. I don't like the greed in the market. I don't like the rehypothecation. And these things are things which bother me. So I'll be completely honest about them anytime. And I tweeted about this the other day. Now's a great time. If you didn't after Luna, please do so now. Now is a great time for you to look at your portfolio and ask yourself, are some of these returns I'm getting too good to be true? I'm not going to name projects. You guys are smart enough to figure it out. Are some of these gains too good to be true? And should I stop being a degen? I guess that's really the question, because one thing is you're going to get your own portfolio wrecked, but 2, it's not great for the crypto space. And that's what frustrates me more, is it's preventing our growth in this space. We're no different to traditional finance, and that is not cool at all. Now, let's come back onto the focus, which is the bit we can control. Let's hope the Celsius issue resolves itself. Let's hope there's no other, catastrophes which can blow up as Bitcoin continues to fall, because I think there's still some more downside here. And that's the scary bit, okay? Because I'm going to talk about some macroeconomic things which could suggest more downside if we continue to be correlated to the equity markets. But the issue is, if Bitcoin has downside because of equity markets, and that causes issues with platforms like Celsius or Luna at the time, then that's going to drive Bitcoin down even further. And it just creates a horrible cascading effect of liquidations, which is not great. And speaking of liquidations, we had 265,000 cryptocurrency traders liquidated in the past 24 hours, totaling 1.26 billion. I mean, put that across your head. That's 265,000 people who maybe now are disillusioned with crypto, who no longer believe in crypto, who, perhaps got wrecked of their own accord. But it's not great that platforms are allowing them to get wrecked in this manner. And it's not great. If you're disillusioning that many people in 24 hours, the world's not infinitely large that we can, get to mass adoption if we keep getting this many wreckages a day. So that's not good at all. Now, let's come on to how bad this stock market is and how much more downside can we get. To put things into perspective, yesterday's S&P was the lowest level since March 2021, okay? Now, it's 21% below the January high. So when you get a 20% correction, that's officially bear market territory. So the S&P is officially in bear market territory. The Nasdaq has been for a while, okay? It's about 30% off all-time highs on the Nasdaq. In March 2020, which was COVID, that was the last S&P bear market, and it didn't stop at 20%. It went as far as 33.9%, so call it 34%, off its all-time highs before it started to recover. Okay, so the worrying thing is if we go as deep of a bear market as we did in March 2020, some could argue this is much worse because there's no printing to be had. At least the market at the time, Jerome Powell started to print, which is why we then got the massive bull run. But this time it's the opposite. We're tightening. Okay, so you can argue that there could be even more correction. If that's correct, you've got another 13% correction left on the market, which would be absolutely devastating and painful for crypto as a whole. And on average, we know bear markets in equities last more than 18 months. So we've got to be prepared for these things, right? We've got to be prepared for the fact that, look, if we're going to fall and continue to fall, even then, once we do fall to our bottom, wherever that bottom is, if Bitcoin decides to bottom at 16, if it's 20, if it's 22, at that point, you could still then be in a winter for 12 months along, going sideways, right? We need to prepare ourselves for this, and we need to be able to dollar cost average in on our favorite projects. And that's exactly what I did. While sat at the airport yesterday, I nibbled, did some dollar cost averaging on blue chip projects, right? Really, really important. Now is a great time to be focusing on those blue chip projects. No time for degen plays, no time for small market caps. Get yourself some of those blue chip projects, dollar cost averaging projects, which you're not going to panic sell. The ones which are crystal clear, you're not going to panic sell. You're not even going to miss a minute of sleep that night. That's really, really important. Okay. So that's a warning there in terms of the market. Now, that brings us on to the critical day we have today and tomorrow, okay? So we've got the 14th and 15th, which is the FOMC meeting. We get Jerome Powell speaking tomorrow. We'll cover it off here on this channel as we always do for you guys. And the market has now flip-flopped, okay? Because the market has suddenly priced in a 75 basis point interest rate hike. Now, for the whole period since the last increase of 0.5 to now, this was not the case. The market priced in 0.5. Remember, Jerome Powell spoke and he said 75 basis points was not on the table for future meetings. Okay, but because we got such a devastating May CPI result where it showed that the 0.5 increase did not have an effect yet, maybe now that is why the markets are pricing in 75 basis points. Goldman Sachs have priced in that they think we're going to get 75 basis points for the next 2 meetings, then 50 basis points, then 25 basis points to get yourself above 3% in Fed funds rates, okay? So the market has priced, all but priced in a 75 basis point rate hike for tomorrow. Now, the good news is if we don't get that, if Jerome Powell sticks to his guns and does 50 basis point hike, we could see a little bit of a rally because this is already priced in. This is why the prices were crashing yesterday. Okay, then that could give us a good opportunity to rally. But if Jerome Powell does do a 75 basis point, at least it's priced in, but it will still probably fall a little bit more just because it's actually happened. Now, if you're in Jerome Powell's position, you cannot be kind right now, and he's not going to be kind right now. I mean, the worst thing about what's happened, and the reason the markets are panicking, is that before all this started, before Jerome Powell did his interest rate hikes, it was all talk, right? It was all talk of interest rate hikes. And the markets trusted Jerome Powell. They were like, okay, we're not going to crash the market. We're going to hold quite well because Jerome Powell is going to work. Once he does his interest rate hikes, we're going to see inflation come down. But he did 0.25 and it didn't budge. He did 0.5 and it didn't budge. So now the market's like, hang on a second, inflation is not respecting this guy's increases of interest rates. So now Jerome Powell maybe has to force a recession, similar to what Volcker did in the previous time this happened, and really just drive the global economy into a recession. So this is the fears of the market right now. To put things into perspective, the 10-year yields passed 3.4% yesterday, okay? That's an 11-year high. That's not been seen since 2011. The 2-year yield made a record since 2007. It broke a record yesterday. Okay, so it's absolutely, this is crazy time right now. This is not just a normal kind of correction we're seeing. And that's the worry right now. Even if we are in a recession already / entering one, this is going to be a deep recession. And some could even argue, could we be entering a depression, right? It's crossed my mind. Could we be entering a depression? Because it doesn't feel like a normal recession. I was around in other recessions in traditional finance. It doesn't feel like a normal recession. It feels very unprecedented, feels very unique set of circumstances, and it doesn't feel great. So for me, I'm thinking the very best scenario is that we're in a medium to strong recession. And that's going to have its effect on markets, and it's going to take time before we recover. Okay, so there you go, guys. That's what we're expecting. FOMC meeting tomorrow. Could we get a bounce? I'm preparing myself for more lows is the reality of the situation, because right now there's no light at the end of the tunnel, right? What is the scenario that can play out? I can't give you a scenario that can play out that is going to run Bitcoin back to 30K. I can't think of one. Like, what's going to make equities now rally up 5%? I just don't see it. Right? Because Jerome Powell has to come out tomorrow. He has to be aggressive. He's going to have to, by the way, we get summary of economic projections, which is the SEP, along with the FOMC meeting tomorrow, because normally you don't always get that. You get them in some meetings. But this one, we are going to get one. He's no doubt going to revise the GDP forecast down, okay, because it's going to go close to zero growth / maybe even negative, right? So, you know, I can't give you a scenario to say, look, this is going to run up. So the reality of what we need to be prepared for is being prepared for that winter, that bear market, suppress prices for long, nibble, Don't go all in your allocation. Don't think this is the lowest price, this is the bottom. Those who are telling you it is a bottom might be wrong, might be right. They're just guessing, right? But the reality is nibble, so you don't have that FOMO. So if it does start climbing up, you're ready, you've bought some, but also keep cash on the side for lower price points, because you may get some crazy prices below 20,000. And then you don't want to be missing out on some of those as well. So you can set your limit orders and have those ready. Guys, if you haven't signed up to BYBIT and you haven't signed up to PRIMEXBT, do consider those as well. I don't margin trade. You don't have to margin trade on those platforms. You can set up and buy on spot, which is very, very normal and easy to do. So do consider getting those set up. Collect your bonuses. BYBIT up to over $4,000 of bonuses. PRIMEXBT over $7,000 of bonuses. Use my affiliate links below. Really does support the channel. Thanks for watching, guys, and we'll see you in the next one.